The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, we're going to start off the show today by looking at the volatility index, the VIX. It moved up a little bit this morning. As you can see, it has been at this 786 retracement for well over a month. The one thing I feel very strongly about is we're going to see some tremendous volatility between now and the 21st of April when we have that huge configuration that has not been seen in anyone's lifetimes over, and like I think Art said, it was like 8,000 years was the last time we had this configuration occurring. I don't know what will happen, if anything, with the stock market, but I do feel very strongly that whatever happens on March 21st, 22nd will be one of the bigger news items of this decade. I felt the same way in 1989 when we had a big astro event, and it was the fall of the Berlin Wall, but the market actually didn't do very much. But this thing is going to be very big. I don't know whether it's going to be geopolitical or geophysical, earthquake or something like that. But it's April 21st, 22nd. I've posted it into the room several times, showing the extent of it. It is so big that it's just it's one of the biggest things that I've seen. And when I did the research for astrology, I looked at conjunctions and oppositions and the number of aspects coming together to form the P index. And I know that these statistics are good. I mean, they're better than 75% of the time, but it's just a probability like it always is. But when this particular one is this big, it's really good. When you have all of these conjunctions and things coming together at the same time, those are the really big ones. If you'll remember, March the 5th of 2009, in fact, we're at the anniversary of that. The market actually bottomed on the 5th, made a double bottom on the 9th, and then has been up for 60 months. And I've also posted into the room the long-term Dow chart going back, 15 years, and it shows the prevalence of the 60-month cycle that is in here. This cycle has been put on the internet quite a bit over the past few days from work done by Ed Carlson, who's with the Market Technicians Association in Seattle. He wrote a book about Charles Lindsay, and Lindsay's pattern was three peaks and a domed house. Lindsay was a market analyst and a newsletter writer back in the 50s, 60s, 70s, and 80s. He died on August the 25th, 1987, I believe, which was the top of the stock market. I thought that was rather unusual that was the day he died, but that was the harmonic convergence where there were 5 planets in the sign of Leo, and that was a really, really strong point. But possibly a year and a half, maybe, or two, but it's been been going up. We had a terrific buy signal back in 2011 in July when we had the first Gartley. So it's interesting to see what's going to be happening here over these next few weeks. Expect great volatility. I think you're going to see really big swings in the Dow. I mean, we've seen several 300-point swings. I think you're going to see 500-point swings, and then 800-point swings in the Dow. 500 Dow points in a day, 800 points in a day, and possibly even 1,300 points in a day. Sometime during this coming year, we're going to see just tremendous volatility. I base this on 3 things. One is the volatility index is incredibly low historically. Number 2, we have margin debt as high as it's ever been, exceeding 1929. And the third thing is that we have a lopsided market where there's so many people bullish, and just very few people are showing signs of caution. There's a few of us out there. Mark Faber, myself, and Ed Salenti, and a few others, but it's going to be interesting, to say the least, that's for sure. But all these things are happening all at the one time, and they fit together with the patterns that I look at, and that's what's really interesting about them. I don't know if you folks have followed copper very much, but I'm going to put that chart up for copper to show you how bad that copper chart really looks, because it is really a nasty looking chart. We're down at a double bottom nearly, and if you'll give me 1 second here, if I can find the darn thing. Oh dear, I've lost it. Don't go away, copper. Here it is. Hold on a second. It'll only take me a second to get this back in here, and we'll be able to see it. There we go. Just give me 1 second, and we'll get it in here. You can see that we've had a pretty big drop in copper. It's had a 10% drop here, since the beginning of the year, and we're making we're down at the double bottom area, down around $3 a pound. If we go below $3 a pound, folks, that makes an ABCD pattern that would take us to about $2.25 a pound in copper. And that sure wouldn't say a lot for the demand for copper, given the fact that we're looking at some really serious, depletion of copper, and it's used in so many things that it's hard to believe that we could have another big leg up in the stock market, but which we certainly can. There's no question about that, but the copper has certainly not gone along with it by any stretch of the imagination. Now, the next chart that I wanted to share with you is the longer-term chart on the New York Stock Exchange Index, and I wanted to bring this up so you'll be able to see it. We're completing that 1, 2, 3, 4, 5 pattern. We made the 1.27 number on Friday in the New York Stock Exchange Index, but if you'll circle, you'll see 0.4 down in there on that New York Stock Exchange Index, folks. The one thing I feel really strongly about, if we take that out, then we will most probably be looking at something really serious. The reason why is that's a very important astro date, because that's when the Bradley model bottomed. It's also the very similar pattern to what we had on August the 15th of 2007. I don't know if you folks remembered this or not, but in August of 2007, that's when I first began doing the radio shows, I believe, it was just shortly after that. Yeah, it was shortly after that I began doing the radio shows for Tom, once a week, I think it was the time. And on August the 15th, it was an incredible day because the Dow was down about 350 points, and the Russell Index was up on the day, if you can believe that. I mean, it was such a screaming buy. We were at an ABCD Gartley pattern. We had all kinds of cycle stuff coming in, and the Russell was up on the day with the Dow down 300. The Nasdaq was only down a fraction. The S&P was down about I think about 15. It was about half what it normally is when the Dow's down 300. And from there we went straight up into October the 10th. We topped on the new moon of October the 10th of 2007, and then we gave back all of the gains. We dropped over 50% in price in a matter of a short period of time. But the number of days that we had from that low in August of 07 to the high in October was 56 days. We went 58 days in this last run between the low on October 3rd, and where we are right now. So that's going to be is that right? No, it's February 3rd to March 3rd. I got these dates wrong. Don't hold me on that. I'll check it after the break, but I've got the wrong time frame in there, but I'll figure it out. I know there's a lot of similarities in the patterns. There's no question about that. It's just that I got the dates particularly wrong on this one. I'll have to figure out how to do this in just a little bit, but I will get it done this day. We've had some interesting patterns form in bonds that I wanted to go over with you, just to show you that we had some really interesting. If you give me 1 second here, we'll take a quick look at it. Oh, if I can only find it. Oh dear, I'm traveling, and so when I find something, it either slips away from me really quick, or I lose it permanently. So bear with me 1 second. There we go. We're going to be okay after all. But we finished a really nice Gartley in the Treasury bonds on Friday. We talked about that. Thursday we were talking about it, but we did go and we made the level at 130.20 in the Treasury bonds, so that held up really well. That tells us that we have basically made some type of a bottom in interest rates, where interest rates should start to drop in this area, if that's correct. That means bonds should rally and the interest rates should go down a little bit, maybe giving a relief rally, possibly even one of those crazy flight to quality things that we see occasionally in the markets. We haven't seen it for quite a while. It was back on February 3rd was the last time we had that. I can really feel very strongly about that February 3rd low, folks. If we take that February low out, which I believe in the S&P was around 1750, about 160 points, 170 points from where it is right now, no, 120 points from where it is now. If we take that out, boy, you don't want to be long stocks, because that would really hurt the bullish structure of the market. What's interesting is if you take a look at the German DAX market, the DAX, which is the German version of our S&P, we're almost down to the 786 retracement of that whole move from February 3rd up to the high we made a week or so ago. And we've had a big move down in the DAX over the past several days, and we're approaching the 786 retracement of that down around the 9200 in the DAX. And we hit 9700 just recently, so it's dropped 500 points while our market has continued to go up. It's only been the U.S. market that has been the strongest, of course, led by the NASDAQ and then also the Dow Jones. The Dow Jones did not make a new high. We made close to a double top in the Dow Jones, but it did not make a new high as yet. The transportations, I'm going to post that into the room before we have the break here, because you'll be able to see that we've had a double top with some beautiful symmetry in the transportation index that held exactly, right where it should have. It went up and made a slightly newer high and completed two ABCDs there in the transportation index at that time. The utility index is still lagging behind the market. It's only made a 786 retracement of this. Back in the old days when Richard Russell was really popular, that was known as a Dow theory divergence, and that was a tip-off that the market might, go to the downside if it ever has a down day. But who knows? It's still early. The main thing that I really think we should focus on, folks, is to keep in mind that this low on February 4th is so important that it is one of the most important days that I've seen in so long that it's I just can't tell you the importance of it. If we go below 17, if we ever do, if we go below that 17, I believe 40 in the S&P, and then we're going to be switching over to the new month here pretty soon from March to June. But if we go below that February low in either the any of these indices, the Dow, the NASDAQ, or any of the others, that's it. Okay, we got the Dow down a bit, the S&P down a bit, and gold up a little bit. We'll be right back after the break.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've posted into Tiger TV the Russell 2000 small cap index, and as you can see, it's also making that expanding triangle, the 1, 2, 3, 4, 5 expanding triangle. This was pattern T6 in Gartley's book. I believe it was around page around 220, right before the Gartley 222. It was around 219, I believe. It's called the T6 pattern, which was under one of the triangles, but it was the most powerful of the ones that they've done. Wells Wilder sold that system as the reverse point wave, and which it is. It's a 1, 2, 3, 4, 5 reverse point wave, with 5 being the high point, and that has one of the higher probabilities of all patterns. It's about 80%, but when it fails, it goes far, far beyond 1.27 or even 1.618. But we've hit this in the NASDAQ, we've hit this in the S&P, we've hit this in the Dow Jones, and we've gone a little bit higher than we were on December 31st of the new moon, with the exception of the Dow. The Dow has not taken out that high as of yet. So there's some divergences that are happening here, but there's no reason for anybody to be scared in the stock market. This trend is still certainly up. There's going to have to be something to shake the tree, and I don't think it's going to be the thing in Ukraine, because that's pretty much, people understand that the Russia. Anybody that doesn't believe that Putin is trying to take over that place, they have 2 French fries short of a Happy Meal. That guy's an ex-KGB. He knows where the cards are on the table, and I think it's just a matter of time till they take over Crimea. And I don't know what they're looking at. So we'll see what happens. The target, if this 5-wave works, would be a 1.618 expansion of the time between February 3rd and the high that we're making now into March 5th, 5 weeks later. That would take you down probably into about 1625 in the S&P. if that were to happen. But, it's still a long way to go. Now, one chart that I wanted to bring to your attention here is the gold market. I put up a 30-minute chart here in gold over the past several weeks, and as you can see, the market has held up incredibly well. It's had several corrections here since we made the top about a week ago, but each of the bottoms has been higher. We're still in a really strong trending market in the gold market, as opposed to silver. If you want to see a bearish chart, and I'll post that right after the break, is the chart on silver looks absolutely horrible. I mean, we have tremendously lower lows, breaking into new lows, and I don't know if that's part of, because it's more of an industrial metal than a precious metal, but gold for some reason has held up incredibly well during this time. That doesn't mean it can't give up the ghost at any particular time, but when it needs to get below 1325 in gold for it to make that look like it would even be bearish. But you look at the daily chart on the gold market, which I'll post in here now, because it's it's been very, very bullish since we made those bottoms back in December, when we were talking about a really good buying opportunity in American Barrick and the silver gold index. All of those have held up extremely well. Had a great rally up into the 61% retracement. We've been here for 2 weeks now in gold at the 61, actually above the 61% retracement, which means it's not backing off. It's not even giving us a 382 move to back off in gold. And when you stop and think that silver has gotten hammered so badly, why? I don't know. I try to rationalize why this could possibly be, and my only rationalization is people want gold more than they want silver. Duh, that's not hard to figure out, because silver's very strong, and gold is very strong, and silver is not. So we're going to take a look now at the silver market here and just show you how negative this market is. I'm going to do an hourly chart because you'll be able to see the difference between these two markets, because it's like watching pork bellies and soybeans trade. They're totally different. So we'll take a look at this now, and you'll see that the move in silver has been incredibly. We've had lower lows, lower highs. This thing's in a strong downtrend, and gold has been in a strong uptrend. Now, we made a big ABCD today in silver on the downside, and so this should give it some relief, but it's been incredibly bearish. It needs to get above $22 an ounce, which is $5,000 from where it is right now, and I don't know if it's going to be able to do that. The fact it can't move up with the news being good. Folks, there's something you ought to pay attention to. I posted the chart of copper. I posted the chart of silver. These two metals are going down. I mean, they've been in bear markets for quite some time. Gold is the only one that's held up. So we've got to take a little break here, and we'll see what happens. Got the Dow Jones down 80 and the S&P down 5.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we've been asked to comment on some of these stocks like BLDP and Plug, these battery-operated things. One of them is up 40% today, the other is up 32%. Those of you that were in the market during 99, that was 1999, not 1899, we had the same situation. These stocks would double, just as easy as you could possibly imagine, with no earnings. In fact, some of them didn't even have sales, let alone earnings. But that's neither here nor there. That's just part of what happens when markets catch on fire and people like it. Look at Bitcoin. I mean, that thing caught on fire, and now they're saying that it's a figment of everybody's imagination. Whether that's the case or not, I'm not sure. Now, I posted the chart of the euro in here on the daily basis, and then I'm also going to post a chart of the euro on a weekly basis, because you can see we've had 3 drives. We've made higher highs over the last several weeks. In going back to, several months, going back to October, and each of the highs has been just marginally, like 10 pips, and then it has a tremendous back off, and that's what we could be looking at here in the euro. The key here, folks, is to watch the U.S. dollar index, because the U.S. dollar index is 53% weighted by the euro. So if the dollar index falls below 79, right now it's around 79.80, I believe. If it goes below 79, that would mean we'd see a breakout above this long-term downtrend line that's been in effect for 5 years in the euro, and that would give us a price objective between 142 and 148 in the euro, if that is in fact will happen. But it's got to it's got to get through 139.40 with a lot of gusto before that will be the case. Now, it hasn't backed off very much. It's only backed off 60 or 70 pips from the high on Friday, but the fact that it didn't go charging ahead during that time makes us wonder whether this is going to be a valid breakout or not, because you've got the three higher highs here, but each one of them is just barely marginal, and then the market backed off $5,000. So that's a pretty substantial move, and we're in the 7th week of a run here in the euro. So that statistically, puts it to a spot where we should get some type of a correction in the euro. And whether that is going to happen or not, remains to be seen. But that's what we're watching here in the currency. Just like February 3rd is the most critical time for the stock market, this price here at this 139.50, 140 level in the euro is very critical, because this is real money, folks. This is the U.S. dollar versus the euro, the largest traded, contract in the world, thousands of times bigger than any stocks or stock markets. So, and many, many times bigger than the bond market. So this is real money by real people moving U.S. dollars and euros. So we have to pay very strong attention to this, because of the fact that it is such an important part of what we do when we're watching this. Now, we've had I wanted to mention one other thing. I've talked several times to Rich Anderson on our show when we're doing the commodity show, and Rich used to come out to California to visit me 30 years ago or more, more than that. But anyway, we used to drive up to where I'm right now. I'm in San Luis Obispo, California, visiting my daughter and my grandson. And the way up here, you leave Santa Barbara, which is one of the most beautiful cities in California, and you drive over the Cachuma Pass. And there's a lake there called Cachuma Lake. It's a very, very large man-made lake. And folks, I went by there yesterday afternoon, and that lake was almost bone dry. I could tell something was wrong, because the hills are usually lush and green during January or February, but because California has been in such a severe drought, it looked like a desert. I had never seen it in the 50 years that I have lived up in this area, or been going through that area. I've never seen it like this. In fact, I was really concerned. I stopped at the reservoir, and it's like 80 feet below the level that it's usually at. In other words, the lake is only 20% filled from what it was, and boy, that is some monster drought, let me tell you. Whether that's going to affect us all or not very much, I'm not sure. All I do know is that something really dramatic has happened to the water supply in California. They got a little bit of relief, but virtually nothing compared to what they really needed, and that's going to affect the grain markets probably in the Midwest, because if we're having this much of a drought here, even though they have all kinds of snow cover and all kinds of, with spring coming, that's going to be very good for planting the crops. But whether this dry weather moves to the east again like it did back in '88, we'll have to wait and see. It's just something to keep in mind. I remember when Rich and I were driving through there, it was 1988, the lake was almost about half full. Now it's only 20%. I mean, it's lost 80% of its water. And we were commenting that the water is due to come this following year, and it certainly did. And whether it's going to do it this year, and I don't know, but it's the worst drought in more than 50 years in California. In this part of California, they don't even have drought records that go back that far to see how bad this thing really is. So if you could see this lake, you would really be surprised. It's almost a physical disaster, a natural disaster, to see that lake down so much. It'd be like Lake Tahoe is going down in water all the time. You can imagine if Lake Tahoe lost 80% of its water, what would happen to the people in the West, because people in Arizona still get water from the people that, in the I didn't mean to digress, but it's important, because that stuff will be coming out into the future. I have a little announcement to make, folks. Unfortunately, after trading all these years, I have to have some surgery, and it's not life-threatening or anything. It's just old man surgery, and I'm going to be okay, but I'm going to have to take a break from everything, and I will be back when the doctor says I can come back. So this will be my last show for a while. And I'll miss all you guys, and I'll try to call into Basil once in a while, and maybe Steve Rhodes, just to check in with you and everything. But this happened in 19. It's really strange because I've had such an emotional 2 days visiting friends and stuff up here that is really really emotional. In 1984. The bond market was making a Gartley pattern after the bottom in 81, and I knew that was going to be the big turn in interest rates. And at that time, we had a family emergency. One of my daughters got very, very ill, and I had to take a break. I was working at Commodity Corporation in Princeton at the time, and I had to take a 3-week break to be with her, and everything worked out okay, but for 3 weeks, I was in the hospital every day, not following the markets at all, and it was the best bottom in bonds that you could have ever gotten. I had some positions on, but nothing like what I should have had on. But when these things come up, it's just amazing. And here I think we're looking at something really big getting ready to happen in stocks. And here I've got to take a little break because you can't trade when you're going through anything that's physically where it drains your mental energy and stuff. So I have a small positions on, but nothing to make any difference at all. So I just want to let you folks know that I will be back, God willing, and I think I'll be okay. And I'll be able to. I've got my partner Jim Bartolioni will be doing the newsletter for me, and I will be doing. I'll be able to look at the computers once in a while, but I'm not going to be doing any physical trading and stuff. So we'll see what happens, and you'll see. Someone just posted into Tiger TV from the Lompoc. Lompoc is a city where Vandenberg Air Force Base is. Any of you guys ever liked Roger Ramjet? If you remember him from the comedy or from the cartoon series that my kids used to watch, Lompoc is where they used to we used to hang out there. It's a really beautiful city in Vandenberg. The trouble is, one of those rockets go up, that whole city shakes like an earthquake. So lots of memories up here. This is where my kids were born. We got a question here from Dan in Basking Ridge, New Jersey. Dan, are you there?
I am.
What can I do for you, my friend?
Yeah, Larry, I was just calling about the February 3rd date. And
yes.
If and when the market ever does go down, if that February 3rd date and level is broken, I was wondering what you would next anticipate as far as the next turn date after February 3rd, and possibly what level?
Okay, the big level is April 21st, 22nd. Okay, if the question is how quickly and if we can go below the February low. If we get there really fast, like in a week or so, that tells you that you're going to go down big time. So you just take the low in February 3rd, which was 1740 in the S&P. The high was, say, 1785, so that's 145 points. You'd multiply that times 1.618, and that would be, 150. So that would take the S&P down to about just around 1,600 is where the S&P would go. It's trading at 1,800 now, 18 and change. It would go down to just a little above 1,600 would be the 1.618 expansion of that. But the key is, Dan, it's got to do it quickly. I mean, if it takes several weeks and we don't even react very much, then this market's probably going to make another new high, and I'll be proved wrong for the 754th time in a row. But who knows? What's interesting to me is that I watch the German DAX because I have so many friends in Europe, and the DAX is already almost down to that February 3rd low, and that's one of the largest economies in the world. I think it's second right after us. We got Germany. I think China. I think U.S., China, and Germany, and so that's not usually It's really amazing how quickly it got down here.
All right. Well, best of luck with your.
It's just okay. Just old man stuff. I've had 3 surgeries already. They're going to do another one. It's rather experimental, but the doctor gives me great hope. But that's what doctors say is they're the most honest professions of all, because right on the shingle it says practice of medicine. I think I've got a doctor now that says I've stopped practicing and I'm doing it right. But I'll be going to a medical center, a very famous medical center, to have the work done by a friend of mine. So I'm confident it'll be all right. Even if it's not okay, I'll be okay. I've had a heck of a good run here, and I don't think anything's going to change that. God's always protected me, so I think I'll be all right. At least I don't have any cancer or anything like that, like some people have. So that's good.
All right, Larry.
Yeah, thanks a lot for calling in, Dan, and I appreciate it. But watch that date of April 21st, 22nd, because that's the key to a lot of this stuff, in my opinion. I don't know what's going to happen then, but it's going to be one big... I'm sorry for laughing, but as I'm doing this show, I keep looking into Tiger TV and to get to see if there's any question. And one of our really, really brilliant readers, and you have to love him, he says, well, he thought I was going to have a craniotomy that would change my opinion from being from bearish to bullish, and they don't even have an operation for that. I would have done that a long time ago if I was able to do that. No, it has nothing to do with a craniotomy or removal of a brain, so who knows? We'll see. But anyway, we'll see what happens. Thanks for calling in, Dan. I really appreciate it.
Take care. Be well.
Yes, I know I'll be just fine. Okay, we've talked about the stock market. We've talked about the bond market. The bond market looks like it's got a chance here. And we will see. Uh-oh, I'm getting it. Echo. Something's wrong. There's something wrong with the Tiger TV. I'm getting big echoes. 10-4. We've got it fixed. I'm sorry. That was my fault. Getting it done. We're looking at the bond market. We looked at the euro. I want to take a look at the Japanese yen here because that has such a strong correlation to the market in Japan. And that Nikkei has made a retracement, a 61% retracement on that. And also we did the same thing with the, if you'll give me 1 second here to get this ready here, I will bring it up and I will be able to see it without any trouble at all. God willing, anyway. And she usually is. Hold on. We made a perfect 61% retracement in the Japanese yen on Friday, and we backed off quite a bit. That tells us that we're most probably getting ready to have a pretty good correction in the Nikkei. That fits in with other parts of the world that I'm looking at too, but it took well over 5 weeks from late January to early March to complete that Gartley pattern in the Japanese yen versus the U.S. dollar. And stopped exactly at the 61% retracement to the exact tick, folks. I mean, that's how accurate it was. It came in at 103.65, and I think the high was 103.67, which was, pretty much spot on. So it should be getting ready to go down now in the Japanese yen, and I would be looking to sell some rallies in here because it certainly looks like this Gartley has completed. And it does look like we're getting ready to do it. We have the same pattern going on in the Nikkei market, but the Nikkei market, folks, is it's a fraction. I mean, a very small fraction of what we do with the S&P and also some of the other indices that we look at. The question has come up to my attention. Someone just asked me about the Chinese market. We've looked at that ETF for the Chinese market several times. We've got a break here with this Dow still up, down a little bit, and the S&P down a little bit.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Okay, folks, we're back, winding up the show here for a while. I know I won't be back for the rest of the month for sure, but hopefully sometime in April. I should be okay. We'll see. Anyway, keep in mind the key things to look at here. February 3rd low in the stock market. That was around 1740, I believe, in the S&P. Keep an eye on that. That was around 3,600, I believe, in the NASDAQ. But if we go below those February 3rd lows, that is incredibly bearish, because it was such an important cycle low, and that means the market went up for 5 weeks. And if it takes that out, that means it should have a really, really big drop. This is very similar to the August 15th low of 2007, and that's why the symmetry is so important of that February 3rd low. It bottomed right where it should have. It was a perfect 61% retracement there, and then we went up and made new highs, just like we did on October 10th of 2007. So we'll see if the same thing is going to occur. I've posted into Tiger TV the chart of the crude oil market. You'll notice that 104.50 level, which was the 61% retracement, stopped it on the upside. And so unless we can get above 105 in oil, we should be heading down in oil. There's a lot of things on the web about Russia and how they depend on the price of oil at $94 a barrel. and that if oil gets below $94 a barrel, there will be, economic problems in Russia. Folks, Putin is a ex-KGB. They don't, he's narcissistic. He don't care about anybody else. So he's not worried about the Russian people, and I think the Russian people know that. And so, it's going to be a political quagmire here over these next few weeks that you hear the stories that are going around. If they do start fighting in the Ukraine, which I highly doubt, that might be a game changer. But frankly, nothing probably will happen, in my opinion, over these next few weeks. But I know much about politics as I do the 200-day moving average. So remember that. I'm just going it from a gut feel of what I've seen in the past with other things like the Cuban Missile Crisis and things like that. They usually just pass over and not much happens with it. So remember, he is a key KGB agent, and so he would belong to the KGB, so he certainly has all of the tools necessary to play all the political games, as opposed to our president, who has virtually no experience in the political arena at all, other than being on the south side of Chicago. And just staying alive there was a real thing to do, but we'll wait on that. The second thing to watch over these next weeks, folks, is to watch how the U.S. dollar index trades, because if it goes below 79, that means the euro is going to be above 140, and that could give us a price of 143 to 150 in the euro if the dollar index gives up. So these are very, very critical levels to look at. So just keep in mind that they're very, very important, and I think that you'll be okay if you follow those things. The bonds have a potential to rally from this level, but if we go below the 128 level in the June bonds, we're going to be looking at much lower bond prices, i.e. higher interest rates. I don't think there's any question that interest rates are going higher. The question is, how long is this rally going to last in Treasury bonds before they finally do start to go lower? Remember, the Federal Reserve, I know they might seem omnipotent to you, but they only have so many bullets in their gun. The question is how many bullets they have left. No one actually knows, but that's going to be the question. What I don't understand is how they operate. Anyway, live every day in an attitude of gratitude, and may God bless, and thanks for putting up with me.
White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.